All right, it's that time of the week again, weekend market update. I am going to be going through the usual cast of characters. I'm going to be going through Bitcoin. I'm going to be going through SPY. I'm going to be looking at ARK K. I've been adding that one recently and doing some of those stocks in the members videos more frequently. I'm going to do the 10-year. I'm going to do the dollar. I'm going to do gold, and that's going to be the agenda. And so earlier this weekend. Excuse me, I did a video that looked at the trend Wyckoff cloud and Elliott wave structures for Bitcoin back when it was 25K. And I just used I don't know, parameters that I created and a total score, technical score based on those metrics. I then did that same exercise for WGMI that you all saw in the video, and then the members got to see that same exercise for all the individual Bitcoin miners. Now, what I want to do in the Bitcoin update for this week is apply that same logic and rationale to where we are today and assign a score for Bitcoin as it is right now. For those of you that watched that video from what day is today? Sunday, from yesterday, the score that I assigned, the technical score that I assigned to Bitcoin back in the August to September 2023 range, because that's where I'm kind of contending these Bitcoin miners are. I don't care what they've done. I don't care that they haven't performed up to this point. I know I've been saying they're on the verge, but let me tell you something. If you're not prepared to wait 6 months, a year, 2 years, 3 years, 4 years, 5 years for a potential 4, 5, 6, 700% return, then this is something that you probably shouldn't be involved in. I understand. I understand frustration. However, exponential type returns require exponential patience, and those that end up, in my opinion, and I'm not a financial advisor, and you all know that. You should know that by now. This is my opinion. My opinion is that the least amount of people end up participating in these things for these reasons. Retail ends up getting frustrated, and institutions accumulate. And it's the same story. We saw it with MicroStrategy. We saw it with Bitcoin. And I think we're going to see it with the Bitcoin miners. And I think they're going to be the best performing Bitcoin proxy from this point forward. That's my opinion. We're going to find out. I thought it would be MicroStrategy 2 years ago when I was saying that's the number, in my opinion, your number two allocation after Bitcoin. And so, well, we shall see. We'll see. All right. I digress a little bit there, but folks, I think that was important for me to highlight because so much of what I do here is trying to project volatility. I'm covering some of the most volatile instruments in financial markets. And with this volatility, and it works both ways, it's very, very difficult to time. Uh, and I would say from a timing, I would say if at the end of the year, last year, I kind of did a recap of all the things that I cover on my X, on my YouTube account. And I did an analysis and I said directionally over the last 2 years, what percentage of the things are materially higher than when I covered them in the direction I was contending they would go. And 85% of the things I was covering were to the tune of at a minimum 50% to 3, 4, 500% higher. 15% weren't. And then in terms of timing of those things, I would say the timing in less than 30%, 25% at best. It's really difficult, and I'm going to get the timing of these things wrong more often than not. I'm just being honest with you. Now, let's get into why we're here, okay? Because I'm concerned about what's going to happen from this point forward. And I'm pondering why the heck Bitcoin, why aren't we seeing, these 30, 35% corrections that are more common along the way. We saw we saw one. I mean, I suppose what was that peak to trough? Yeah, that was 34% into August of this past summer from the high. But from then, it's been pretty muted. I mean, for that, we were at 22%. So far here, we're at about 18%. Back in the summer of 2023, that was 21%. So much more muted in terms of the volatility in terms of the way I just measured it there. And I think one of the reasons why is what I'm going to get into next. And that's a continuation in terms of the score that I assigned to Bitcoin's technical merits in this region. And I assigned it a score of 8. And this was the video I made available to everybody based on trend, Wyckoff, cloud, and Elliott wave, and the strength of each of those things individually combined. And this is my assessment. This is not a fact. So where are we today? What is Bitcoin score today? Trend. Trend is a 3. Why is trend a 3? And 3 is the highest score you can get in each of these categories, by the way, from me, the score. I create the test and I grade the test. So am I cheating? I don't know. So why is trend a 3 out of 3? Here's the principles by which I'm judging each of these metrics, and specifically we're looking at trend analysis. This is from Stan Weinstein's concepts. The 30-week moving average, the more space that we get between this 30-week moving average and the steeper it's pointing upwards, the stronger the trend is. Okay, and so we're somewhere in that type of area, I contend, with Bitcoin. And so getting rid of this back here, where were we? We were here. We checked back, but we breached. We were down here. We checked back, coming out of a stage 1 uptrend, this accumulation, check back. That's where we were here. So trend got a 1. That's the lowest score. And it was below the 30-week moving average. Now, had it checked back and been above the 30-week, it would have gotten a 2, because that would have been textbook early stage 2. This was in doubt here, but again, the other structures confirmed for me that we were firmly entrenched in early stage 2. That's why you can't rely on any one of these things individually. So now let me get rid of that and say, from a trend perspective, where's the 30-week? Here's the 30-week. What way is it pointed? It's pointed up. How much space do we have between the 30-week and where price is right now? We have a good amount of space. This is a 3 out of 3 in terms of trend. That's what that is. That's a 3 out of 3. From a Wyckoff perspective, where are we? And again, let me pull up the chart from yesterday's video just as a reminder, because I think it's important to understand distinctions in terms of stages and the implications. I claim this was an accumulation, one schematic. Okay, I went through all these details yesterday. Sign of strength here, checking back, and then expansion, phase E expansion. Okay, we're done with that. And this was a Wyckoff. I graded this a 2 because we weren't in expansion yet. We were in the sign of strength region, and that's a 2 score for me. So what more closely resembles where we are today? And I've done this a few times already. A reaccumulation. That's this schematic I have on the top of the screen. What's the highest score in a reaccumulation? It is when we're above this sign of strength, last point of support, in expansion. That's where we are right now. Okay, let me get rid of that. Let me zero in on the entire. Let me move this. And it's almost to a T. It's almost to a T. We've got buying climax, up thrust in phase B, creek, spring, test, LPS, back up to LPS, SOS up here, SOS, LPS, and boom. That's what we're looking at up there. This is phase E expansion. And so now, should we be very surprised that these dips are a lot shallower? And, a day like we saw Friday in the indices, it was the worst day of the year for the indices, and Bitcoin is still holding on to 95, 96K. Well, no, because we've got a trend highest score possible, Wyckoff highest score possible. Where's the cloud? Where are we in relation to the Ichimoku cloud? This is an indicator that took about 30 years to fine tune and formulate. We're well above the cloud. Okay, cloud is sloping upwards. And here's price in relation to the cloud. So not only is the trend up, the cloud is up. That's a 3 out of 3 in terms of the cloud. Elliott wave, I also give it a 3 out of 3 for the reason that we have very clear structures. 1, 2, 3, 4. And given what I just shared on the reaccumulation entering expansion, I do not believe this is a 5. I do not believe. I do not believe this type of compression, this type of massive reaccumulation leads to an expression of energy that's that short. As always, I could be wrong, but this is 1, 2, 3, 4, 5, I think, setting up for an extended type of fifth wave. And so total score here is a 12 out of 12. It's the highest score. It's the highest score. And so why do I keep saying Bitcoin is the most bullish of the financial assets out there right now? It's backed by all the different things that I look at. Could it go down this week? Sure. Could we go down? Could we go down to test this 30 week even at 81, 82,000? Sure you could. That wouldn't change this score materially. If we breached it, it would knock it down a point, but we'd still be firmly entrenched in a bullish trend. Just like when we breached it down here, okay? Just like we breached it here. Now, if we start getting closes, breach it, and we're closing in the cloud, and this 30 week starts flattening out, that's early stage distribution, okay? I'll be looking very, very closely for things like that if they arrive, but we're nowhere near that at this point. So Bitcoin remains very, very bullish. I don't know any other way to objectively measure it than what I've just shared with you here today. SPY. SPY looks like we could be in for some more downside. I mean, objectively speaking, the candle that we saw, let me put this in candle format, that we saw on Friday is significant. It's significant because for the Elliott wave concepts, let's just look at 1, 2, 3, 4, 5. Typically, your third wave is the strongest, okay? And so what does that mean? When you see a big candle in either direction, whether it's up or down, I always think to myself, it's midpoint of the potential drawdown on any time frame. And so this is a SPY 8 hour, and I've got the 30 SMA on the 8 hour up as well. And we can see a few things if we just look at the recent history here on what happens when we breach that 30 on the way down. There's more downside, okay? Here, there was a little bit more downside, 1% or 2 there. Back here in September, there was a little bit more downside. Back in June, there was a lot more downside. And that hasn't happened every single time. I mean, if we go back to April, we've had a little bit more downside to the tune of 4 or 5%. Let's go. We have had situations where that hasn't happened. Back in April 2023, it breached, and then it came back, it breached again, and then it just kind of consolidated around it before resuming up. But more times than not, it's led to more downside in the short term. And so I have to be open to that. And I had the second path. I've had this on here for weeks now. The second path being Let me share that with you. Get rid of these drawings. The second path has been, and let me zoom in. This blue, maybe it's not bright enough. Let me do something like that, line it, turn it into yellow, okay? And let me turn that into line and then brighten this one up. So these are the two paths that I've had up. This path was here. I was saying this could be a 1 and then 2 here, and then we're working on 3. But with what's going on Friday, I think this could be either a B, C2 to come here, or on a larger scale, we could be in for a bit more than that, in that this larger degree 3, 4, and we completed a 5, just a shorter degree 5 that I have up here. And now we're in for, you know, a larger scale ABC type correction, which is always a possibility, which could take us as low as 542 on SPY, and still be, so that's about 10-12%, and still this bullish count is still very much in play here on the large time frame. So those are the two paths that I see. And of course, we could, again, that could have been a fake out and we resume off of a running flat type of correction, A, B, C here, and it moves up. But that, to me right now, is a lower probability. I am looking for some more downside on SPY in the coming week, maybe longer. ARK, same concept here. ARK, I've been really bullish on for a while now, ever since it broke out of this massive accumulation, secondary test, phase B test, LPS. This is an expansion. ARK is an expansion right now. Doesn't mean it has to go up every week, though. In expansive phases, this was a path that I've had drawn out for a while now, 2 potential paths where the 3, 4 was made here and we're moving up to 5, or 3A, B, some type of flat correction prior to moving up. This huge candle from last week gives me more thoughts that we've got a little bit more downside before this correction is complete and we resume upside. We're going to find out. Yields, on the other hand, they're looking bearish. I've been projecting and talking about this head and shoulders here for a while, right? I said I was looking for some type of shoulder on the right side, and now we breached the cloud. And could we get some checkbacks? Sure, but this to me looks like the start of a downtrend. So yields to me look like they're heading lower. These things don't all have to move at the same pace and junction in terms of markets and yields. Game mode is hard. And that's why day traders, I don't think, will do well trying to use these metrics to inform what they're going to do in terms of equities. But the target here for yields for me is 3.86 sometime in the next couple months. The dollar continues to act as we've been projecting since December. I projected a move, equal energy move in terms of an ending diagonal. I was calling for a breakdown out of this, and that's what we've gotten. We've now broken into the cloud, out of the bottom of the cloud. 30-day simple moving average is pointing down. Could we get a check back to it to 106, 107? Sure. I still see this initiating its largest move down coming up. This is a distribution. This is a distribution pattern. And so sign of weakness, that's the biggest move coming out of a distribution. The target for the dollar is 101 in the short term in the next couple months. The path there is going to be a bit difficult to project. Gold is, I think, starting the early stages of a consolidation corrective move. If we look at the power behind the move, as this is just kind of grinding up into this diagonal, we see divergence, a bearish divergence on RSI. There's a lot of room between this cloud and where price is. That's a huge spread. We don't see that very often. Let me show you the spread. The last few times it's gotten extended, the spread now is greater than it's been all year, and even going back to last year, pretty close to what it was here in April. Although it didn't go down right away, right? You saw a consolidation, it went back up, but eventually that consolidated, and you had the same type of bearish divergence show up, although it showed up a lot earlier and price continued to go up. So that's anybody's guess. I'm still looking for a consolidation, no reversal of trend. We're still looking at, in my opinion, a very, very firm uptrend as it relates to gold. Just a healthy consolidation in the form of a potential larger scale 3-4 correction. Something, something like this wouldn't surprise me. But who knows? This is a powerful uptrend. So we're going to continue to monitor that and take it from there. Folks, I hope you had a great rest of the weekend and take care.